Good evening, everybody. I hope you are all as well. You see, y'all are some of the ones still holding on. So I want you to not feel overwhelmed. This is why I purposely waited to do the numbers at the end, because I did not want the pricing and the numbers and the reports to overwhelm everything else that you need to do in the plan. Because the plan is not just, let me come up with my sales and my expenses and that's it. If you have not noticed, it's so much other stuff that needs to be thought about in the world of doing the business. And so I purposely put it towards the end so that you can get everything else off the plate and then just deal with it. So that was my hope. The other thing is we are not going to not get through all of this. The numbers was just round one. We still have tonight and 2 more classes. So don't feel like you have to have everything right this moment. What I have asked you to do is be the leader, make the decisions. Don't drag out making a call on what you need to do, because that is what will make it overwhelming, is if you delaying on deciding something. And from operations, from marketing, that kind of stuff, make the decision. What are you going to do to promote it? What are you going to do as far as your industry? All that research and understanding where your business is, what market space that you are trying to get into and how that is maneuvering. That kind of stuff is why I wanted you to get through all of that. If you are comfortable with those decisions, then where you are now should only be dealing with the financials and the numbers. And we only started with thinking about what amount of money do you need to get started with. We haven't even gotten into what you need to operate. So don't go faster than the class if that is going to overwhelm you. I sent everything ahead of time because some people want to move ahead. And so I've sent you that information to assist you in that process. But you do not have to go faster than what I am covering. Do you understand that?
Yeah.
Yes.
The last of the Mohican is here. You have all the details that you needed to get through this week and next week. The only piece that has not been sent to you is to talk about the executive summary and to talk about getting ready for final presentations. Other than that, this is, if we have to only talk about this, then this is all we talk about. If y'all get through this and want to go back and deal with some sections or talk additional about some sections like marketing or something, then we can do that. But that is why I created the situation that we can have 3 or 4 classes about the money and numbers instead of 1 or 2. Do you understand what I mean? I know that this is a big piece of the puzzle. Do you think realistically, if we started with this, that y'all would have processed paying attention to any of the other stuff?
Not me. Not me.
Because y'all can give me the feedback, and in another class, I can alter the order. And I altered the order to put this at the end.
For
But
me,
if y'all think it's better that I should have addressed it sooner, then I can move it up in the order in the future.
No, I think we needed to do it how you had it outlined, only for me anyway, because I've gone back into the pitch part and was able to rewrite or finesse and have a better understanding of who my target is and what I'm trying to say. At first, it was just, oh, I make tasty cakes. And that's like, so everybody make tasty cakes. So Uh, and I always say that, but I didn't know what I was trying to do. So doing the work, doing the research, and that part is easy. Thinking about it, writing about it, because it's fun to talk about it. But when you get down to the nitty gritty of the numbers, yes, that's overwhelming. And if I had to start with that, getting off work and coming into that, and I'm in Excel hell all day, I would just feel like not another number.
You would have cracked
So
early in the
that's why I
class
said
and I
I
made
think,
it through. Okay.
yeah,
What
yeah.
do you
I
think?
can't speak for anybody else. I don't know. Maybe somebody
I
else
was
like
just going to say, what do you think, Miss Colby?
I'm sorry, guys. I'm walking in my to my house right now.
No, you fine. Do you think that you should have we should have done the financials earlier?
I don't know. I can't say. I really can't say.
If we would have did the numbers sooner, do you think you
I
would have
think
thought about the other details?
no, I wouldn't have. I don't think I would like. I feel like okay. So I think I do like this order because if we would have done the numbers first,
You'd have been
I
stuck
felt
with
like, yeah, I would be stuck doing it. And then I can't think about nothing else. Like, oh my
exactly.
gosh. You know what I'm saying? So yeah. Yeah.
So that was why I said nope
Well,
at the end, because I need them to get all the other stuff out the way. Because once we hit them with this, that's going to be a whole nother level.
Yeah.
And so if
right,
you
right.
notice, we started out with the light and easy stuff, then we made it to the middle, and now we hit it to the end, which is the last piece of the puzzle. Think of one of the races, the track races, when they run around the track and there's a team and they have to hand off the baton to the next person, and then they got
Yeah.
to run the next piece of the track. Basically, what we have been doing is in increments. The first set was, let's just pay attention to, there is a set of things that you need to understand are getting ready to happen. That was the pitch part. Acknowledge, do you really want to do this? And can you tell me, even if it's not correct information, can you just process the basics of what's getting ready to happen? That was the pitch part. That was first couple of weeks. The second couple of weeks was, let's put in all the details of everything from the industry through the operations and through the marketing, and let's get all of that out the way. Now we say, okay, everything is in place except the money, the expenses, the pricing, and let's wrap that up. So this is the last piece of the track. If we had started with this, you both have said you wouldn't have made it around the track. You are running towards the finish line now. This is the last piece of the puzzle. And so the fact that you have made it around the track to this piece means you can finish this race, whether you think it or not. I tell y'all, trust the process and understand what I'm having you do. If you are feeling overwhelmed, then you have to be clear, what is it that is overwhelming you? And think of it like the elephant and paying attention to, you eat it in pieces. So something that makes you feel overwhelmed, what would you call that? What would you
Right.
say?
It's basically I was just gonna say it's just the unfamiliar information that I have to quickly learn and prepare for the pitch and all of that. That's what I was thinking, like learning the information that I didn't know about and knowing that we have a couple of weeks. Like yesterday, yeah, it was overwhelming. I'm like, oh my gosh, these numbers, what is going on? Like it just got me to where I was just feeling overwhelmed
But
because
here's
I
the
didn't.
key. The only thing yesterday was an introduction. And for you to understand, there's a whole nother world to financials and the numbers and the money. It's not just pay me and pay bills. As
Right.
the owner of a business, you have certain things that you have to keep up with from a financial perspective. Or if you want to do certain things, you have to keep up with that from a financial perspective. And I'll give you an example. I had an accountant. Every year we wrote off everything. And one year I sat at an event with a bank, and the guy was the branch manager and said, if you write off everything and your business look like it's losing money every year, and then you come in asking me for a loan for your bank, for your business, why would I? You just showed me paperwork that your business is losing money every year. That made sense.
Mm-hmm.
Everybody talk about the bank won't give you no money, but you don't tell nobody it's because you came in with financial statements that said you don't make no money. Who want to invest in a losing business? And it never had dawned on me, because from the culture we raised in and not knowing business, we only know what we hear. And we heard you write off everything when you got a business. Yeah. And so I wrote off everything.
So how do you change? So after that conversation, what did you change in order to be prepared for the next time that you need a banker? What did you change on your end?
I didn't write off everything I needed. Well, not necessarily. So let's just say, for the sake of an example, let's say you can write off your gas, right? On traveling around. So let's just say, for the sake of the argument, I got one car, and let's say you use your car to go see your friends and your family, do your grocery shopping, and to work your business, right? You do not use your car 100% for the business, but you 100% write off the gas. Do you understand? I didn't have to write off 100% of the gas, but if I did that, nobody is going to come and hunt me down. But but it would impact the fact that I wrote off something more than I had to. So let's say I spend $200 in gas a month, but I really only use about half of my gas to do business. Then I should have only wrote off $100. I didn't have to use the business to pay all the gas. I could have paid some out of my business and some out of my personal. But because I put it all under business to write it off, that took away from the profit. Multiply that by everything else you do in your business. You buy ink cartridges and you write all of your ink cartridges off, but everything you print ain't business. And vice versa, all kind of other stuff that you buy. So, or do, if it is eligible for something that you may be able to put under the business, we come up with ways to how to write off everything. I have a guy who goes out to eat all the time and he write it off under the business. Do you think everything he go out with his wife, his kids, that ain't business, but he writing it off under the business. So if you got $1 million and you writing off $10,000 worth of eating all year, then the world ain't gonna cry. But if you only got 25,000 and you writing off $10,000 worth of eating, then you already about to be having no money, because that ain't including all your other expenses. Do you understand what I'm saying? So what I'm saying to you is, depending on your accounting and your bookkeeping and what you choose to write off, everybody knows every little thing they write off is not all business. Some personal stuff we let slide over to the business, to be real. But at the end of the day,
right,
when it comes to that, works on the tax side, it doesn't work on the lending side. And you have to make a decision. Do you want to keep writing off everything so you don't have to pay $2?
Right.
Or do you want to be realistic so that you're eligible for $5 in lending?
Right. Okay. Got you.
I mean, you haven't made $20
Lending
million
versus taxes.
that it's going to kill you to pay a couple $100 in tax. But
Right.
that couple of $1,000 that you could have let be profit, you turned around and wrote it all off so that you wasn't making no money, and now you're not eligible for no loan. So those are the kind of things as an owner and as the management, you have to make those decisions because they don't always line up together. Sometimes in that instance, the financial decision for the taxes does not line up with the goal of getting lending. They're separate and you have to make that choice. That's it. Do you understand what I mean?
Yeah.
So when I talked to you yesterday about the financials, I'm just introducing you to the world of understanding financials. That was just introduction. There are formulas for return on investment, ROIs. There's all kind of other ways to work these financial records or different income. That was just intro. So that's why I'm saying, don't get overwhelmed. Just take it in as you learning and being just introduced to a new world. There's nothing,
Right.
the software is going to do this for you. Speaking of which, did you ever
Mm.
get yours separated? Did you see that email to get your QuickBooks separated?
No, I didn't. When did you sent it to me? What, last week?
That was back when you sent the email. He answered like a day or two later. So
Oh,
make sure
okay.
we get that straight for you so
Okay.
that don't mess you up.
Right. Because I'm
We need to
like,
get that
I'm
straight
not ready.
tomorrow. So when you start typing stuff in, it won't mess it up for you. All righty.
Okay.
Anything else you need me to address overwhelming wise, or does that help?
It helps a lot. I
What about
feel
you?
at peace.
Thank you, Miss Patty.
I'm fine with it.
Mr. Golden.
I'm fine with it.
Okay.
I'm here. I had to drive. I had to go to the border patrol. So I had to deal with the feds.
And you passed?
Yeah. I ain't got no Mexicans in my truck, so they let me back.
All right.
I'm good. I'm good
Okay.
because I deal with numbers all day, every day. Anyway, I gotta know numbers as far as like how much cheese is gonna take me to get here and there. So I do that type of stuff every day. So it just I got confused when you doing what you was doing because you want to talk about truck driving. I had to realize that.
Yeah, this has
That's
to do
why I
with
got
any
confused.
business. Yes.
Right. That's why I got confused because I was thinking about trucking. I'm like, man, what the hell is she talking about, man? It's making my brain hurt.
Yes. Well, I'm glad you got unconfused because now I'm
Well,
getting ready
yeah.
to pull another piece of the puzzle in. All right.
I think the cash flow part, I get that one more. I get that one more. I think I'll be more on top of that one.
Because that's exactly what we're getting ready to do. Is do this cash flow. Y'all ready?
Mm-hmm.
That's what I'm talking about. You ain't scared. That's right. You ain't scared. All right. So all right. Y'all see y'all see my Excel spreadsheet for cash flow?
Mm-hmm.
Yeah.
All righty. This one is specifically for operations. If you notice, it is broken down by month. It is also broken down somewhat close to the income statement. Alrighty, but there is a caveat to it. So in this instance, because we needed it to print out on a regular piece of paper. It's somewhat broken up. So I'll sidebar and go over here to the cash distribution worksheet that goes along with the cash flow. Now, this is specifically addressing labor and non-labor items. And the cash flow side, we are talking about the income, and we are talking about the distributions, and you'll notice the difference in the categories when you see it in a minute. So on the income statement, it was just a long row of things to expense. This side is a little bit broken into difference, and you'll see in a minute. So let's begin. So January, you started out with January 1, we started out with nothing. The business doesn't launch until January 2nd, unless you have given yourself a cushion. So for this instance, do y'all want a cushion or no cushion?
No
No
cushion.
cushion.
I see that's unanimous. All righty.
My ball already rolling. I just gotta
Alrighty
get
then.
I gotta get the truck.
All right, so January 1, we don't have any money. We start getting some sales or invoices, and they have actually paid them. We sold some cakes, cupcakes. We did some production, and we got some money in January, right? So let's say, for the sake of the argument, we got 500 in January. We got 600 in February, 700 in March, 800 in May. So first of all, let's just stay with the cash sales. So far from just this line item, what have you learned about your business? What have you learned? If you just pay attention to what just happened this first.
That your sales increase.
Exactly. Something is happening that your business is growing. Because bam, if this happens, what does that mean?
You had a bad month.
Mm-hmm.
You had a bad month, or something happened. Or your business may have cycles or seasons. So let's say, for the sake of the example, you Patty, and wedding season is crazy for you. And let's just say the wedding season is a whole nother level. So you get in and then it drops back down. So what does that tell you?
Seasonal.
Exactly. Something in particular happens that there is a main time frame that your money jumps dramatically, because that's like 2-3 times what you normally make it, right? So let's just say this is where the financials, reading your financials will tell you these stories, because you never look at it. If you just look at, I got $5 this month and I spent $4 this month, then you're not paying attention to the big picture that you can clearly see looking at them side by side, right? Having nothing to do with anything else. You can tell that. Now, let's say, for the sake of the example, this happens and you're not hands-on with the business or whatever, something happened April, May, June. That would now be on you to go and investigate what happened and realize what's going on. All right, just using you as an example, Patty, what happened now?
We went through the wedding season. It slowed down a little bit over the summer, and now we're going back up into the holidays.
Ding, ding, ding. See what I'm saying? It doesn't have to be that hard. Just to look, you can process, this must be holiday season. Now, this stuff in here, I don't know. It could very easily be just because, it could be birthdays, it could be anniversaries, it could be a wedding here or there. It, it just, that doesn't matter, which may be your steady income. And then certain times of the year, it may be other times. Now, just from this perspective of understanding that, if we see that this quarter is going to be big and this time frame is going to be big, as a business, to prepare, what should you do?
Make sure you got some money stacked up.
There we go.
Market and market.
You can market, but just even if forget the market part, just because this actually is happening, you had $700 in March and jumped to 2,000 in April. That means you need 3 times the ingredients and you're gonna be cooking 3 times the amount of time. So your schedule need to be clear, and you better took some money from March, January, February, March, or whatever, and put it up, because you got to go buy this stuff because they're not paying you till you deliver. That's what the game of cash flow will help you pay attention to. There will be certain months you're going to need more money than others. So let's say, for the sake of the example, you sold $1,000, 500 of it was paid, but you got another 500 you invoiced and you waiting on it to come in. Sold it to the government or a business or whatever. So they owe you 500. And matter of fact, they don't owe you in January because they bought it in January. They paid it in February. So it happened in January, but they didn't pay you till February.
Or there's a deposit.
Collection of, it could be in this 500. Or it may not be a deposit at all. Let's say for the government is not gonna pay you a deposit. They're just gonna pay you the money at the end. You're gonna invoice the whole thing. A business may not pay you a deposit. So if a deposit is required, don't take my business. I'll find someone who don't need a deposit. A personal business preference, a personal business requirement. If they want your stuff that bad and you require a deposit, then they will pay it. But that's not mandatory. That's your operating practices, right? So we'll just go with they owed her $500 out of everything. And for the sake of the argument, if it was 1,000, they paid 5 down and paid the other 5 at the end, if even under that scenario. So they paid her 500. Everybody paid their money here. For February, they paid their 600. March made their money. April made their money, but March, she might have had really 1,700 in sales in March, but she only got paid 7 of it. So they paid her the other 1,000 in April. Do you understand what's happening now? On this level, this is collection of account receivable, meaning I billed them, but the money didn't come in until a particular month. So for the sake of the argument, this 1,000 could have been a bill all the way from January and they didn't pay it till April.
Right.
But from an income perspective, is you count it for the month it came in. There's nothing you can do about it. It's not about when you bill it. It's about when it hit the bank. and cash flow. Because I can't pay bills with money I ain't got.
Facts.
All righty. Sales of fixed assets. We're not going to sell anything, so we're going to skip that. Miscellaneous income could be, we just going to stick with Patty. She sold some Patty Bakes t-shirts. That's not your primary sales income. That's a miscellaneous income. So like when y'all go in the restaurants and they be selling you the t-shirts and cups and stuff in the corner, that's not their primary restaurant business income. Do you get what I mean?
And that can be like, for me, like it's on photography, especially on my slow months, you know, I can offer that. That can be like a miscellaneous, right?
That
You know what?
depends. Do you
Okay.
consider your photography a primary?
No, it's usually video production.
Okay, then that could be your miscellaneous income.
Yeah.
For the sake of this example. And it doesn't necessarily have to be. You can have service 1, service 2, service 3, and it could still be your primary and it just didn't make any money.
Okay.
It doesn't have to be. I just made that as an example of how that'll be a conversation on how you set up your what are your product or services.
Mm-hmm.
And then just any other income you might have got a loan or whatever. All right. So if we notice, January, we only made $500. February, we made $1,100. March, we made $700. April, we made $3,000. May, we made $2,000. I can just put something in here just for the sake of this. All righty. So now, remember the other one, they just said how much money you got in all year or all month. They didn't break down out of what category or how it hit. Cash flow is paying attention to how did the money make it to the bank.
Mm-hmm.
You see that? And so for the whole year, you made $16,000. But where did you make it? You got paid right on time, and then some you had to go out and collect. And in some businesses, you will have to do that. And there may be, you have to pay somebody to do your collections. You understand?
Mm-hmm.
All righty. So end of the day, this is just saying how the money made it in. You could have got a loan in June for all I know. That's all this is saying. It's helping you pay attention to the patterns of the money. It's helping you pay attention to the influx of money coming in and the money going out. That's all cash flow is doing. Now, from an income perspective, is anybody confused on what they're learning?
Got it.
All right, y'all know you have to stop me so it does not get overwhelming, right?
Mm-hmm.
All right, so if you
One
also
question.
notice up
One
here,
question.
go ahead.
Sorry. I know I always say sorry, but I hate to interrupt. It just seems so silly to ask, but I plan to launch my website July 1st. So the beginning balance, in the meantime, I will just make a personal investment, I guess, to get, I guess we'll talk more about it as class go on. But the beginning cash balance, for instance, what I put, for instance, if I'm going to start with $2,000, put that there for the month of July.
Are you starting in June or July?
I'm starting July 1st.
So here's the thing. You're gonna start July 1st, but what is your fiscal year? Is it January to December?
Yes.
Or is it July to June?
January through December.
Okay. You've already incorporated, correct?
Yes.
So the minute you have the 2,000, you need to put it in whatever month is ready, because it goes in the business bank account, because there are expenses that you must pay to get ready for the door to open.
Yeah. So, okay.
Do you understand what I'm saying?
I do. So
So
I
for
need to
sake
put
of
the
the
money
argument,
in and be operating with
the company is operating whether you like it or not. You might not be
Okay.
selling nothing,
Because
but
you're
costs are occurring. Whether you sell anything, you still got to pay for the Secretary of State. You still got to pay. You get what I mean? There's things that you're going to have to do to
Yeah.
get ready. That was the list that I was trying to tell y'all yesterday. You
Yeah.
need to make that list of things you need to do to get ready to go, because that creates things you got to pay for. So you may put your personal investment in now because you got stuff you're going to be buying to get ready.
Okay.
So by July 1, it may not be 2 sitting there. It may only be 15.
$2.
It might only be $2.
$2.
So are you
Okay.
saying she needs to put her numbers starting in July if she's launching it in July?
No, that's
Put
what
the
she
numbers
was
now.
saying. I said
Put the
it
numbers now.
starts when she starts spending money for the business,
Yeah.
Oh, period. No, regardless if she's launching it or not.
because she is incurring costs before
Yeah.
July.
Okay, got you.
And so with that being said, you're right. So I need to make sure that I have money in the business bank account for the business license, well, the registration, the license, the serve safe, everything that I need. Whew. See, I thought I could just do that outside of the business, but it wouldn't make sense because it's a business expense. So it wouldn't make sense to
Yeah.
have it on a personal
Well,
level.
apparently you do understand financials more than you think. You just have to say it out loud.
Yeah. Okay.
The minute you said it out loud, you processed yourself. That's it. That is a business expense. So why would you be paying it personally? Because then you commingling the whole game of the money.
Yeah.
So let's pause right here and have a conversation on the separation of personal and business. Personal is your life that you need to live, eat, drink, breathe, function, family, all of that. It has nothing to do with you running a business. Everything that has to happen on running a business is separate from personal. That's why one is called personal and one is called business. So I should not be paying for business stuff with my personal account, and I should not be paying for personal stuff with my business account. That is called commingling the funds. And you are mixing it up. And that breaks the glass on the separation of trying to do business on litigation, because you prove that you one and the same. They are not separate. Although it is more of a headache and tiresome, this is just because you a small business does not mean all the rules of business don't apply to you. Just because you would like the shortcut does not take away that you are responsible for the business. If you want to do something personal, like you need to pay yourself or whatever, then you need to write yourself a check. You need to pay yourself a check. You need to set up a payroll process to pay you in W-2 or however you're going to decide to pay yourself. And you take your check, you put it in your personal bank account like your business is your job. And then You go pay your bills like you get a check from a job. If you need to put an investment in your business, then you need to put an investment in your business. And you need to write yourself some kind of note or letter that it is either a loan or it is an investment into the business. And document how this money made it in there. Because it could be a day you got to get audited and the IRS say, where does $10,000 come from? I took it out my 401k and invested it in the business. Do you understand what I'm saying?
I understand what you're saying. And for me, Tamiko, I'm starting from scratch, even though I had my business, I closed my bank account, everything is from scratch. And so with that, I have things already. You know what I'm saying? Like I have my baking supplies and I have, we paid for this class. I didn't do that under a business, even though it's business related. And even other continuing education stuff I've taken up since the beginning of this year, that is not, it is a business expense, but it's not, I don't have an account that it ran through. So how would I handle that now? I mean.
Okay, so then
already.
that's different if you have not set the business up. If it's not already incorporated, then that's different. So is the incorporation paperwork in place and the bank account just closed, or?
Right, I have it. I have the incorporation. I'm taking a break. I'm starting from scratch. I closed the bank account and I just like said I would get everything back up and running, like as far as administrative stuff, like renewing the business license and getting my ServSafe certification and all of that, like now, this month. But
as far as the IRS is concerned and the state of Georgia, if your incorporation is up and running and you have said you are operating from January to December, then as far as the government is concerned, your business is open, regardless.
Even if I don't have my state license?
You have
not state license, sorry,
incorporation.
the county license, the city license to work.
If you go, if we, all of us right now, go to the Secretary of State and look up your business, if the word active is there,
Okay.
then as far as the state of Georgia, who rules incorporation, you are active.
Mm-hmm.
Now, what you do with it is up to you. How you handle it, that's on you. But because they say you active, you are active.
Hmm.
The business is running, whether you running it or not. On paper, it is running.
Okay.
So the things you are doing are under an active business.
Hmm.
So I would keep up with the things that you are paying personally. And then that may be an accounting conversation on, do you reimburse yourself or do you count that as investment to start up the business?
Okay.
But the business is started on paper, regardless of where the money moving. Do you understand what I mean?
Yes, got it.
All righty. So you just have to choose when you feel like opening up a business bank account, because the business is moving.
Right.
So you can go on and open up the business bank account and put the money in the bank account and pay for the stuff out of the business bank account. That's totally up to you. Now, let me say this. Are you using the same business name and the same tax ID number?
Yeah.
Then as far as the government is concerned, you have not closed the business.
Okay.
You just closed the bank account.
Okay.
And you just didn't work it.
I got a quick question. I'm going to interrupt. With that investment thing, say, so say for instance, if I take my own personal cash and I invest it, as far as like putting up down payment for my truck or whatever. So it's what I could write a letter to myself or come up with some type of form or whatever to do that. That's so if I get audited, I can show, well, I took this on my personal account to, well, because 9 times out of 10, I'm gonna put the money, I'm gonna take the money from my personal account, or I'm gonna take it to my personal stash and I'm gonna put it into the business account to use for the down payment. So if that's a good idea or a bad idea, or it's a way I could come up with some type of form or whatever. That's so I won't get audited or it's gonna look bad or whatever.
Well, in your case, because I know you be on the block shooting dice, and you just gonna come in with a wad
Yeah.
of cash. I'm joking for anybody who think I'm telling the truth. I am joking. He is a hard working man who do the right thing. All righty. So
I
let's
just had
just
to create
say
you know, so I'm still hustling though. Still hustling.
I'm gonna put it back on Patty. So let's say Patty didn't open up a bank account and she is working, and every week or every paycheck she put up $200 and she cash out her bank. She puts the check in and she takes the 200 out and she puts it in an envelope and put it away so she don't spend it because it's in the bank, and she put $200 in the envelope every 2 weeks. So now she end up with this $2,000 and she don't go and open this bank account until May, right? The key is she can show that the money came out the bank. But if she takes it out, I would keep those receipts to show I pulled it out my personal bank account, and I would hold that as receipts for my startup fund to go along with the envelope. You know, you take it out the ATM or you did a withdrawal slip at the counter, and I
Okay.
would show that this is how I got the money. It shows the day and the date and everything where you took it out.
Oh,
So
my
she
bank statements. Ooh, that's how I love you, Mr. Pico. Bank statements.
That's right. The world of tracking. All righty. All right. So let's so from a income cash flow perspective, you understand why the different rows and the different categories is hitting. You understand from a beginning balance that it's a running balance of how much money is in the bank and how much you got, right? Everybody realizes how we got here. 26,000 here, 24,000 here, because that's what it was on November 30th. And during December, we earned this other 2,000, right? Everybody get that?
Yeah.
So that's the ending. All right. 13 of it was in sales. The other 3,500 was in invoices that had to be paid. Right.
Mhm.
So that's the point of why you are looking at this cash flow, because you can visually see what's happening for the whole year. You can see when I put in extra money. You can see which months are good months and which months are bad or regular months. You can see when I had to bill people and how long it was taking them to pay me, if you know who the vendors are. So it shows you any given month how much money came in, right?
Mhm.
All
So,
together.
so line 9 is basically deductions.
Say that one more time.
Line 9 is basically like
Where are you pointing to?
collection of account receivables.
Okay, what about it?
That's basically that's the money that's being deducted, like owing basically.
Somebody owe you.
Oh,
It's not a deduction. That's you finally got the money.
I mean, yeah, that's what I meant to say. Yeah.
So
Okay.
you billed them and it took them a month, it took them 3 months, it took them 6 months, whatever. This is finally paying it. They finally paid it. Okay.
Mhm.
Accounts receivable. So some don't say collection of accounts receivable, they just say account receivable. So it just depends. Now, here's where the game starts to change. First row, cash purchases. That means your credit card. That means your actual bank card, whatever. You went out and bought stuff for the business. Whatever it was, you had to pay for it, right? We have pay on accounts payable. Anybody know what that means?
Pay debt.
So we have a debt payment. So what do you think is the difference between pay accounts payable and pay debts or debt payment?
That stuff that's already, that stuff that that you got to pay for, that you know you got to pay for, or got to have the money for.
Which one is which?
Accounts payable is if you are being invoiced by a vendor.
And now you owe them.
Right.
Mm-hmm.
A debt payment is when you got a actual loan, that 10,000, you got to pay on it every 2 months.
Okay.
So let's say, for the sake of this, we're gonna say that 10,000 is a loan. So that came in here. So for the sake of the argument, you start paying it the next month. We're gonna pay 200 every month now. It's a fixed loan. I gotta pay this payment every month, just right? Now here's the game. This payment is due regardless of whatever you sell. This is a real loan, the business owe. All right. So you got to make that payment, or your business credit or personal credit gonna be messed up. That's all. All right. Now, let's say, yes, but pay here is accounts payable. So let's say you set up an account with a vendor to, let's say we'll make this one on Colleen. She has to fly around all over the country to go do videos, production. So let's say for some odd reason, her travel agent pays for everything, and then she just got to pay the travel agent. So 1 month she flies out and she spends $2,000 in travel, and we talking hotel and plane. So let's say it was January, but she doesn't pay it until so let's just say, for the sake of the argument, she owes $2,000. So she doesn't have $2,000 yet. So she's gonna have to pay some 1 month and some another month. So she may pay 600 here.
In increments, yeah.
Yep, 600 here. And what is that? 1,200, 800 here. Right? So that's her paying it back. Or she may have an invoice that month is 600 each month, or 800 that month. We don't know, but we're just saying for you to understand this. Now, so I'm gonna come back to that one in 1 more minute. Now, the owner withdrawals, let's say you didn't pay yourself a W-2, you just wrote yourself a check for a withdrawal. So you just take an owner withdrawal. So you take 300 here, you take 500 here, you take 400 here. We'll take 900 here, take 1,000 here, because we done got excited. We got money coming in. We're gonna take 2,000 here. We're gonna take 600 here, 400 here, 500 here, 400 here, 500 here. Does anybody know what I'm doing?
You withdrawing money.
Yes, but how much
Right.
am I taking?
Oh, you making it up? Wait. Oh, you I don't know.
I changed numbers, if you notice, right here. See these numbers?
Mm-hmm.
What do you think these numbers have to do with these numbers?
Wait, what's the arrow? Which numbers?
So this is the money that came in. And this is how much I cut myself. So other than the month that we got the big check, what else is happening all these other months of the amount of money that you took out?
You paying yourself at least half.
Ding, 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 Mike. Welcome to your financial statements will tell on you. So you have taken half of the money out every single month. Whether you took it, you paid attention to the rest of your expenses or not. Whether you got it or not. Because if you notice down here, you're already going negative some months. Because you took half. The business may not be ready for you to start taking half. Alrighty. So.
Trust me, yeah, my feelings got hurt on that one, player. Trust me. Some months I had to take 10, 15%.
Yeah. So we're just gonna assume here that we're not gonna get any fixed assets. I don't feel like getting into that one. Debt payments. We don't have a debt until we borrow the money, right? Everybody remembers that, right? So we don't have a debt till we borrow the money. Alrighty. Now, if you notice here, it's a labor expenses, go see the worksheet, and non-labor expenses, go see the worksheet. So the things here are mostly, oh, and we have interest payments. So let's say for the sake of this argument, there could be interest that you have to pay on some of this stuff. So I don't know, and it may be broke out, but let's say on an invoice, it says for every month you late, you owe 10% interest for the sake of this example. So let's say this month you was late, so you had to pay $60 on this 600 that was due. So 10% of that is $60. You was late the next month, so you had to pay $80. Do you understand what I'm saying? So it would depend on if you had to make some kind of interest payments. Because in this instance, the debt payment is the interest is calculated in the payment. So this is something separate that's completely out of not in the calculated in, is owed separately. You may or may not have that situation, but that's in this example, they put in things that for you to pay attention to. Alrighty, so let's pay attention to our two categories that could have been lined here and in QuickBooks or bookkeeping or other stuff. They will be all lined up. They wouldn't be separate forms. This is just so you can see everything. So labor is broken into straight out labor set salaries and wages, payroll taxes and benefits, and they just giving you the space if it's something other, a bonus or whatever else. So we said the business started in January. You paid yourself, you paid help, or you took a draw. So we're gonna say we talking about help. So for whatever reason, you owe them $200. For the sake of this example, we're not gonna go through a whole to do of up and down and round and round. We're just gonna say we pay $200 a month for help. All right, we have to pay taxes on it. For the sake of this exact argument, we're going to say taxes, benefits, whatever is 10% of that. So that's $20. And they're on payroll that you got to pay the taxes. So that's $220. And when it was the heavy months, you gave a bonus. So you gave another $200. And the winter time, you gave another bonus. All right. Now, non-labor, remember the rent and lease and utilities and all that stuff was on your income statement. They were there, as well as payroll and taxes. They were one total. It wasn't broken out by month. That's the difference here. That one showed you everything as one lump sum of everything. This one is making you pay attention to what month do when, because it starts to build out what's happening as a budget. So we're gonna say 400 for rent, right? I'll make that 400. And that's consistent. They are combining all the utilities. They're not breaking them out individually on this example. So let's say we're gonna make that 500 for utilities. And that's the including your phone. All right, insurance, guess what? We only pay insurance once a year. I pay that in August and I pay $600. Advertising, I have a budget to do $150 a month. All right, now this advertising and marketing could be going to networking events, flyers, whatever you said you was gonna do for your marketing. All right, supplies here would be office supplies and operation supplies, not product supplies. So the ink cartridges, the paper, pens, that kind of stuff. So we'll say $50 a month we spending on supplies. Now, these numbers could technically change. We just don't got that time to be going up and down. So we need to point at a story to happen. Alrighty. You pay for your license. So we're gonna buy our business license every year. I'm gonna pay $250 for that. We're gonna do our incorporation. Or I'll put it here. We're gonna do our incorporation and business license and everything. That's all of that stuff. So that was that month. So we good for the whole year. So everything else is zeros. Now, some people don't want to pay a lump check at the end of the year and they pay quarterly on their taxes. So it's broke out. We're gonna say you don't have a business car. Here's one of those things we writing stuff off. We might be writing off our car note to the business, even though it's not wrote under the business. And because I use it for the business, I'm writing it off. That doesn't mean it's not 100% being used just for the business. The car don't sit in a driveway unless you're going to work a business scenario to deliver your cakes and pies or to drive to the set. You using that same car to go to the grocery store, to go to the hair store, to go to the doctors and everything else, see your friends, all of that. But we write it all off. That's what I'm talking about, coming where people are writing off stuff that they don't have to write off, but they are.
Mm-hmm.
I mean, because I mentioned in my case, I've been over a truck driver, but we get per diem, so we get tax cuts on our food and what else? Say if I buy a car and I put on my company name, because I'm only gonna drive the car when I'm home. So I could put now, I could put a like what driver transportation or something like that. I don't know.
I mean, when you home, if you're using it for your personal, it's not a business expense, it's personal.
Well, yeah, you got a point there. But what? But say, so I got a quick question there. So when I get my my fuel card, do you think it's a good idea to use my fuel card when I not use my personal card too, or just what you think?
I can't tell you what you should do to handle business. I just went through the scenario of people writing off personal stuff under the business.
So I ain't gonna do that then.
That's up to you. I can't take, that's between you and your accountant and bookkeeper conversation, but you know for a fact, you know it wasn't business when you did it. So you clear what you're doing.
Oh, yeah.
Everybody know what they doing when they writing off stuff they ain't got no business. They just do it. So can't nobody tell you how to run your business. You can write everything off so that you don't have to pay all these taxes. But if you ever need to go in the bank and get a loan for the next truck, and according to this, they know you made $100,000, but you wrote off $95,000, and you want me to
that's
give
gonna be
you another,
impossible.
you want me to give you another 100,000? I don't know if you're gonna be able to make this note. That's the choices that you're making when you are using your business to take care of personal. All right, so here we go. All that stuff we talked about. You only had $500 in January that came in, but you had $2,000 worth of bills to pay. So you're in the hole. Now, if we go up here, the end of the month created the number for the beginning of the month. So January 31 at midnight, I was negative $1,500. So February 1, when I woke up, I was negative this number, right? Fallon, it's 7/17. Fallon. Natasha. Just a moment. I need to take a 2-second break. It's 7/17. What time are you getting up? Thank you for waiting. All right. So if you notice up here, the beginning balance is changing every single month. Do y'all see that?
Mm-hmm.
Because different expenses are happening. Different income is happening. So nothing is an exact number. So I'm just waiting for y'all to process this and pay attention to that.
Why did you have to put the labor expense and the non-labor expense on a separate sheet? Why couldn't you just put it on this one?
We just did it to break it out for you to pay attention to it.
Okay.
When we made it, that was all. But if you notice, those numbers are right here. Labor expense, we paid them to 200 every month, the 20 in the taxes, and then we had the bonus months, right?
Yeah.
So all these numbers right here are these numbers right here.
So it's consolidating.
Yeah.
All of the, like, for instance, the non-labor expenses there. It's
all of these numbers right here. See,
Okay.
1,600, 1,100, 1,100. If I go over
Yeah.
here, my non-labor expenses, 1,600, 1,100, 1,100. See it?
Okay.
So it just made it separate so that you can pay attention to all the other stuff.
Okay.
But those sets of numbers are on this page. We just calculated them separate.
Okay.
So that we could keep the screen low. Spacing. Now, but if you notice, different months have different costs going on. Different income came in different months. Some months, the bills are consistent, whether you made the money or not. The bill is due. Now, let's say for the sake of this example right here, you had to pay somebody $220 and you paid yourself $250. So you took the $500 anyway. Soon as you got the money, you already spent it. Now, You had $1,600 in non-labor expenses that you should have been getting ready to pay. You had a lease, you had utilities, you had your marketing, you had supplies, and you had your business license and fees and taxes. Now let's just go with the assumption that you didn't get started those first couple of months. Fine, I'll take it out. You still had to pay the cost to get the business set up and going. And your business, this still came out to be $970 a month. And you were still in the hole, $470. Well, maybe you don't take a check soon as you start getting money. Do you understand how that works? Sometimes people don't get paid the day doors we start getting money. They have to wait.
Mhm.
Which becomes part of maybe potentially putting a cushion in place. Some people may not make a profit for the first 6 months, the first year. So, but the expenses is still happening to get the business moving. That's why some people get a loan to help cover. Now, if you notice the cash flow, it says the formula is B minus C. Total cash receipts, which is total income, minus the total distribution, the expenses of bills you had to pay. So that left over, what was net, what was left over. And the first month we didn't have no money. We were in the hole. The second month we started in the hole. We had to make the money, which by the time we paid all the bills from the 1,100, we were already negative with the 220. Now we had to absorb the 220, plus we had to pay out 820. So by the time we paid that, we ended up 280 positive. But we turned right back around and didn't make the same amount of money the next month and went right back in the hole. Well, that wedding season kicked in and now we starting to generate income. But here we go. We was all the way up to 9,000 thinking we got it going on. And then bills kicked in and we went right back in the hole.
Whoever owned this, they need to start OnlyFans. Yeah,
we're not fooling with you. This could truly happen in a business and people don't understand what's going on. I had $20,000. Why is it that I'm still in the hole? Because you had 23,000 in expenses. And so at the end, you ended up with a positive 3,000, but that's because the last month made 2,000 and absorbed the money that was in the hole and all the expenses that month. Do you understand that? So that's how you ended up with $2 at the end, because you ended with a good month, the last month of the year.
Yeah, just explain why a lot of restaurants are not business during COVID. And I kind of feel bad for them now after he just broke all this stuff down.
So, but this can be any business. It doesn't just have to be a restaurant business. This could be any business, depending on what month they start the business, depends on what month they get sales, depends on what kind of expenses they come up with. So let me bring it back to you when we talked about teaching you how to do the conversion chart. Remember, we just made an overall percentage of expenses, which would have absorbed all of this. So for the sake of this argument, if they brought in 26,000 and they put out 23,000, that's almost 90% in expenses. Something has to happen. We have to bring in more income. We have to cut down our marketing. or we have to increase the way we market to get more income. We have to get some kind of influx in to cover just paying the bills. That was the point of the conversion chart, to show you somewhere in here, this is just taking care of the business. This is not paying you all like you think yet. Now, the owner did pay yourself $5,000 out the year, but if you'd have took half of the money, you'd have really been in trouble. Do you understand what I'm trying to show you? The financial statements tell stories if you know how to read. What am I paying attention to? For the sake of the argument, if you didn't take any money for yourself, then the business by the end of the year would have ended up with 8,000 altogether.
And you don't have any employees.
We're taking out the employees. She said them employees is out of here. Now, that's what's happening. You see, the income is changing every single month. What you start out the month with is not exact every single month, because different incomes are coming in. What you ended up with at the end of the month is being altered by what kind of bills is being paid out. And so some bills are going to be just like I showed you over here. Some bills are going to be once a year. Some bills are going to be quarterly. Some are going to be every month. See right here, insurance. So 1 month bills was $500. 1 month bills was $1,700. But overall, you do have a consistent amount of bills that you know you're going to pay. On average, you're paying $1,100. But there's certain months you're paying more than $1,100. Once the business was up and going. Do you understand that?
Mm-hmm.
But if I don't pay attention to that, I don't notice that. If I'm just in a function every month mode, I'm like, okay, I paid the insurance this month. But if I have an estimate to know when the insurance is due every year, then I can pre-plan to get ready to know August is going to be a month I got to pay an extra $600. What if I didn't have a good month? I may need to put up a contingency. You may want to save 10% for another month here or there. You may want to put that up when you have good months, until you have very good months on a consistent basis. Now, if I'm making, $100,000 and my bills are only $5,000 a month, I got extra money. But if I'm only making $10,000 and my bills are $5,000 a month, I do not have a lot of extra money if any given issue hit, or particular months I owe more bills than others, and I didn't prepare for that. That is what a cash flow statement is trying to show you. Pay attention to your bills. Pay attention to particular months that are going to be the better months than other months, and come up with what will you do. That's all it is. Now here's the game for the adjustment to cash flow. New debt. Now I put it up there at the beginning for the sake of this example, but that $10,000 that we got the loan for really could have been right here instead of up there. And I take it out. This is all about line item. It's not about whether it was in one column or the other. It is just really identifying. So other is just a general term. So when they break out a line item and call it something, it's just naming it so you know where it is. So new debt, I got a brand new loan. Owner investment, there's where you put your that $2,000 you saved up. in the envelope and finally put it in the bank. Investment, you got some silent partners, or you got some actual partners, and now you got some more money in. Okay, well, that helped absorb cash flow and the issues. That's it. You might have got another 10,000. Uh-oh, I put in 1,000, huh? Where's my numbers? Why is this not going positive? This formula is not right.
So you have owner withdrawal in 2 places?
No, I only have owner withdrawal in one place. Where do you see the other place?
Scroll back down. Reduction.
Oh, this one.
Mhm.
Yeah. So let's just assume, for the sake of this example, again, the one at the top could have been from the sake of like paying a debt. Like the money you invested, you lended it to yourself, you want it back. And the other is like you taking a withdrawal, like a pay. Because remember, you wrote those notes.
Mhm.
So so let's say the reduction from cash is paying yourself back. You loaned the money to yourself. You didn't just completely invest it and then it just stay there. It's a loan.
Okay.
So, but up here is the ones where you was paying yourself some kind of a salary.
Salary.
Check.
Okay.
Do you understand what I mean?
Yeah.
So this owner withdrawal would not necessarily be every month. It might just be a one-time thing. And you just had to acknowledge that it happened.
Pay back a loan.
Just like you had a one-time thing with the loan going in. But for the sake of the argument, even if the second row was not there and you just had the one row of owner withdrawal, it still would absorb either way how it's happening. So we can just keep adding rows in here if we just really wanted to in the cash flow. It could be other rows in there. That's why you have these other columns. You can call it whatever you wanted. That's the game of understanding your cash flow versus the income statement. Remember the income statement, and you can break out your income statement. Remember I told you it could be by month, it could be by year, it could be side by side. It's up to you. You can have multiple products, services that I was telling you, your cost of goods, your materials, your shipping, your labor, your packaging. Okay. So it just depends. Even on this one, we put accounting and legal together. You could have them separate if you wanted. Is there any questions on this part?
The top of the sheet said projections for year 1. So is that some of it assumption or is it actual?
Well, at this moment, it's assumption because the year hasn't happened.
So we are supposed to assume it in our business plan.
You're going to have to assume on how you think this business is going to make money. Yes. So in your instance, you could very easily, remember I was saying you may adjust it and make a custom where you know particular months you'll make more money than others because of circumstances like I just did.
Mhm.
Or you can just have an even, steady flow of money coming in every month. And assume I'm going to average this amount every month. Do you understand that?
Mhm.
Alrighty. Questions.
I just feel like if we're seeking financing, and we're assuming what we're going to do for that year and the subsequent years, I mean, what kind of challenges would that present if we're in front of the loan officer and really can't give any real, I mean, it can't be too high because it's going to look kind of like, I don't know, like we don't know what we're talking about, or if it's too low, then you're not worthy of getting a loan because you're not showing that you're able to even pay it back.
So what's the sentence of the question?
I don't know. I guess it's just a statement. It's the assumptions thing is a little weird to me because you don't want to inflate it. You don't want to inflate it because no one's going to believe that as a startup business that you're going to blow up like that. I mean, a Shaq
Welcome
coming.
welcome to you as a leader making a best judgment of what you expect the business to do. But here's the thing, you have been in business. So take from your past experience, what do you think happened on a realistic answer?
Yeah.
Unless you feel like you're going to do something different, then you know for a fact what you can do.
So how do you calculate how can you calculate a projection? Like, you know what I'm saying, from our past sales? How do you calculate that to where it's like, it makes sense?
Okay, so this is where that research and making decisions will have to come into play.
Okay.
You are the decider of the business. You have to just call it. Let's just say, for the sake of the argument, I'll use myself again. So let's say I charge the $2,500 to do the tax exemption, and I say I'm going to do at least one tax exemption a month. Then my projection is $2,500 a month. I'm going to get 2 a month. Then my projection is $5,000 a month. Now, let's say for the sake of the example, 1 month I only get 1. Another month I might get 3. We don't know this for a fact, but we have to have a goal.
Right.
Now, reality will tell the truth, but for projection purposes, we've got to call something on what is the goal that we expect to make. And so if off of past experience, I do 1 or 2, then to put in, I'm going to do 10 a month might be inflating it.
Mm-hmm.
Something happened. I jumped from doing 1 or 2 that I can do 10 a month every month. Not to say it can't be done. It is to say I better be clear that's what I'm doing. And I need to be saying realistically, I can truly have not just the money, but the time to pull that off. Don't just say, I'm just going to do it arbitrarily. A lot of that has to go into, do you got the time to do that much? Don't just say, I'm going to bake 1,200 cakes and you know physically you can't bake but 50 cakes a month. Time-wise, equipment-wise, budget wise, I don't know, but you have to make that decision on realistically, can you be two places at one if you're doing production and you expect to get on the set once a week for your productions, or do you expect to be on the sets once a whole month for production? On average, what do you want to make on each production?
So basically, like, basically that's our goal. Like, we could just, our projection is our goal.
Correct, because now you have to put it in place to make it happen,
Right.
which goes back to those marketing efforts.
Gotcha.
I don't know that I want to start pricing because you only have a few minutes left. So why don't I pull up live plan so that we can actually go in here and see what to do. All right. Let me go in here and share my screen. All righty, so let's go in here and let's play with the forecast. All right, I'm gonna just skip the video because I ain't got time to play with that right now. All righty, so here we go. Revenue stream. What kind of revenue stream are you going to be doing? Are you billing by the hour? Are you billing by how many cupcakes you selling? Is this a consistent charge, or is these one-time only fees, right? That's all they're asking. And what do you want to call it? So for the sake of this example, I am going to do a flat fee. So we're going to say tax exemption. It's going to be revenue only. Next. How will I enter the revenue? A constant amount. Varying amounts is over time. That's that custom piece. When do I want to start making this revenue stream? I want to do $2,500 for the tax exemption filing. And I'm going to start it start in March. Create it and it's gone. The computer is going to do the rest of the projections. See? Y'all see that? That was me putting in my price and what my service was going to be, and that was it. It automatically calculated. Wow. That's what live plan is going to do. Let me add another revenue stream. Quentin, we can hear you. All right, let me do another one. Let me say I am going to sell a book sale. So I'm selling that by the unit. All righty. It's a constant amount. The price of the book is not gonna change. How many books do I wanna sell? I wanna sell 25 books a month. Well, how much are my books? My books are $10 a piece. Fine. It's in there. It's done. See that? And it tells you how much you're making per month. It tells you your total, the years, all of that. You see that?
Yes.
Now, it does the year and it starts with the months and then it breaks out for the next 3 years for you. Let's go back, add another one. All right, I'm gonna do billable hours. I am going to do accounts payable collection. Billable hours. It's gonna vary over time. It's not gonna be the same every month. How many hours do you want to bill for? It's got the little info thing to tell you right there. You can go in and put in for the month of 2023. Now this is the custom. I'm gonna do 10 hours last month. I'm gonna do 20 hours this month. I'm gonna do 25 next month. I'm gonna go up 5 every month, 30 the following month, 35, 40, 45, 50, 55, 60. Now, personally, I know I don't do a whole lot that last month of the year. It's the holidays and I'm not really doing a whole lot, so I ain't doing it. You see that? For the year of 24, we'll just say I'm gonna do a 10% increase. So 370 plus 37. For the sake of this example, we just gonna say 410. And for 25, I'm gonna do 10% of that. And it's gonna be 450 for the sake of this. And then I'm gonna go in next. Alrighty, what's my rate that I bill an hour? I bill $50 an hour. Find it, calculate it. And there I go. These are all assumptions. Do you understand that? But y'all understand how I got to those assumptions.
Mm-hmm.
Live plan is not going to make you break it down like I did. I'm showing you how it happens. Live plan just says, tell me what you want me to calculate, and I'm gonna put it in here. It gives you your line item by the month. It gives you your forecast report up here by chart. And any given chart, you can tell it shows you the amount you did every single month. It tells you for the next 3 years what you made, right? Well, guess what? Just like we had to put in income, we got to put in the expenses. All righty. What do I need? Is it a cost or is it labor? Let's do cost. What sort of cost is this? Fine, we'll just start out with a general cost. All right, is it constant? I'm gonna say over time. Yes, it's constant. So it's gonna be my $400 for the month. And I'm saying March of 22, but it really should March of 23. But I'm gonna go ahead on and put in January 23. Now let me go back and put it in under March so you can see it on the report since it's doing 22. All righty. So, oh, I forgot to say what it is. Office lease. Office rental. All righty. It's $400 a month. I'm gonna create it. Save. And I now have a cost that's offsetting my income, right? It's lined up, it's listed, it's showing you all the way across like I was doing it in Excel, but they do it for you. If you look up here, they have the actual chart. Revenue, direct costs, personnel, individual expenses, what's your assets, what's your taxes, the assets that's starting that budget, your balance sheet, your taxes, dividends, your cash flow, and any of the financing that you think you're gonna have to do. Let's just go back here and do an asset. Let's add an asset. What do I want to call it? Camera. Alrighty. Do I want to list it by type or do I want to list it by the price? In this instance, I'm going to say a one-time amount. I'm going to say it's worth $5,000. And I got it. And is it a long-term asset or a current asset? Guess what? It tells you straight out. How do I know? Current assets are used up in 12 months or less. Long-term assets are over the value of the year. They even got a breakdown even more down here. So we're going to assume new camera types of equipment come out every year. So I'm just going to call it a current asset because next year I'm probably going to buy something different. Fine. Go on, create it, and put it in the report. How long do I want to spread out the value? That's where we was talking about the depreciation, or you want to keep it all at one time, right? Keep it at the full value, which is now just cash in, cash out. Create it and put it in. It is done. And I just keep on building the categories. What else do I got that I say is an asset? My Dow collection. What did I say it was the other day? I think it was 10,000. All right, what's the type? Is it a long-term asset or a current asset? But let's go here. How do I want to enter it as a constant amount? How much do I want to say it is? I want to say it is the 10,000. I'm sorry, this is how much I'm spending each month. So I'm gonna say $1,000 a month. Starting February. But it's gonna, I'm buying it, it's gonna be asset. I'm gonna say it's long-term asset. And I'm sorry, I forgot how long do I want to say the value will hold. Forever. It's not going to depreciate. It's in. Yeah, see that? And you can do that across the board. All right, so here we go. My profit and loss sheet, there it goes. See it? Direct costs, projected profit and loss, direct costs, gross margin. They even break it down in a percent. My operating expenses, because I don't have no details in there. My operating income, my depreciation, my total expenses. So what's my net profit? And that's the percent of how much profit do I make? How much is spent in income? How much is made in percentage of net profit out of what I got? How much cash did I end up with? It calculates it for you. And you can do this, the more you add in the details, the more it will make the calculations. Here go my balance sheet. Current assets, right? Remember the one that was going up 1,000 every month? Accounts receivable, other current assets, long-term assets, depreciation. I don't have depreciation because I'm doing cash in, cash out. Liabilities, they have it broke down in categories. I don't have all of the details of the liability, current liabilities, accounts payable, income taxes, sales taxes. All of it is there for you. Retained earnings and earnings, that's the owner's equity stuff. Projected cash flow. There's my projected cash flow.
I was gonna say, I do have my, well, I told you, I got my QuickBooks connected to it, and my profit and loss is pretty much like accurate. So I guess I don't need to do this part.
Well, so that was you wanted to separate it, so I don't know.
Okay.
And it depends on, does it flow both directions? Because if you connect this and you put this in your projections and you put all that stuff in, does it go back into QuickBooks? That's number one. The other thing is, because it pulled in from QuickBooks, will what you have in input QuickBooks input all the other details when you, because this cash flow isn't just coming from just QuickBooks. It's coming from, remember, mine isn't connected. So it's calculating from all the things that I put in on all the other reports, from the my what I said I was going to do from the balance sheet, what I said I was going to do from my income, what I was going to sell, what I was going to, my expenses, all that stuff is still in here.
Okay.
So this cash flow is calculating from what you put in. So I can't answer what happens with QuickBooks connected to it. You're my first one, and I don't know what it looks like. But as you can see, not that hard, right? Especially now that I've explained it. So does this still feel overwhelming?
I feel better about it.
And so let's just say over here, you know what? I decided that I want to edit my book sales. Then you click on it and you go back to it. I don't want to do 25. I think I'm really only gonna probably sell 20 a month. Fine. It just recalculates. See that? That's it. It will do the work for you, but you got to make the decision. Everything you saw me typing in was all my decisions. The biggest piece of the puzzle is people don't want to make a decision. They want to make a debate on what ifs. I don't know what to tell you about what ifs. This is a projection. What do you think realistically you can pull off doing? And because of your knowledge and research and information, you have to call it. I haven't researched your industry. I don't know what your time schedule is and available hours that you're putting into the business. You may or may not be working it full time. So you would have to determine that. So let's just
So,
say, go ahead.
Tamiko, so create scenario. If I'm doing cakes, cupcakes, and cookies, that's 3 different scenarios, right?
Mm-hmm. So you have 3 different product lines.
Okay.
So just like I put in the tax exemption, and then I put in the books. I mean, I was just making up scenarios to show y'all that different ways you can put it in is there. But you may have a row for cakes, you may have a row for cupcakes, and you may have a row for cookies. You may want to be detailed, and you may say a row for sour cream pound cakes and a row for lemon pound cream cheese cake or whatever. I don't know. And then you may say a row of how many chocolate chip cookies, dozen chocolate chip cookies a month you're gonna do, and a dozen of chocolate cookies a month. You know, you may know that you're gonna sell more than one type of cookie more than the other, and you may want to put them in by different types of product, that you have a list of a product. So you may offer 10 type of cakes you sell, 10 types of cookies you sell, and 10 types of cupcakes you sell. And you may want to put them all in there and have the 30 lines of your products and what you think. I'm gonna sell 2 dozen of chocolate chip a month. I'm gonna sell 4 dozen of chocolate cupcakes a month. I don't know. Do you know for a fact you're gonna sell 2 dozen chocolate chip cookies a month? You might sell 3, you might sell 1, but somewhere in here, there's where the gold piece of the puzzle comes into play. I expect to sell at least 1 dozen of every kind of cake, every kind of cookie, every kind of cupcake a month. Then that's what you put in there. If you want to vary it, then you see where you can break it out and say which months you think you're going to make more of one or the other. Or you can just leave it and just do a row of cakes, a row of cupcakes, a row of cookies. Quentin is a truck driver. He may estimate that he has an estimated on average what his loads will pay him. So he may do, I don't know, in any given week, he may do 3 loads a week. He may do 3 loads a week, and he may get paid $3,000 a load. So that might be his estimate, is that he'll do $3,000 for 3 loads a week. And he may multiply that by a month, because he's asking for the month not the week. And he may end up saying, I'm gonna do, 9 a week times 4. So he's making 32,000 a month. And he's gonna put that in as constant. And that may be his only income stream. Now he has to go in expenses, and he's gonna have to estimate how often he gotta buy and replace tires, how often he's gotta pay for fuel, how often he's gotta pay for insurance, what other costs he has to do. He's gonna have to put all of that in. How many times he think it's gonna break down a year? How many oftentimes he gotta do oil changes? Do he got an oil change every month, every other month? What does he gotta do? Because he's gotta do it based on what the trucking industry is happening. That's where the industry piece of it comes in. How often do you think you are going to fly out of town to do production? Once a quarter, once a month, every month? Then the travel costs are going to have to go in there.
Mm-hmm.
So it's just calling it on what do you think you would like to see happen in the business.
Right.
Does it, by the time you put in all your expenses, does the income cover the bills and pay you a salary? If not, do you see that this year might not be the best year to take the money? You might have to increase next year and get ready for next year. Or you may have to, if you needed to profit this year, then you're gonna have to change the way you do things. Which is where we were playing it out on the conversion chart and the different scenarios. So when you go in here, you've kind of already worked that out. But even if you didn't, if you put in, I'm gonna make $32,000 a month, but you're gonna end up with $50,000 worth of expenses, that's not gonna work. If that happens, you got to make some decisions. That is part of building your business plan, is to catch this stuff while you playing with it on paper and figure out what will you do differently. Because this is not coming up with the answer you wanted. So what can we do? We can lower our expenses, we can increase our prices, we can do more sales. Do you understand? Remember that? You can make those adjustments. We can add in more products, we can add in more marketing. There's different things, but you got to decide what it is you're going to alter. Okay. So I do want y'all to take a stab at it, even though we haven't come up with the price calculation thing. You can still play with it like you just saw me do. Because I do want you to start, if nothing else, start putting your expenses and your balance sheet items in that you are aware of. But you can still take a stab at what you want to estimate you think your prices are going to be. We can always edit the price. That's the signal. Thank you, Patty.
Sorry.
Nope. I already know I went over a couple minutes. So any last minute questions? Because I'm going to let y'all go. Patty has sounded the alarm.
Wrap it up.
Yep. Going once, going twice. Y'all have a good night. I hope this was helpful again, and I hope it did not feel as overwhelming as you thought, that you see if you just hold on.
It's overwhelming, but send us the links. I'm gonna be watching it tomorrow.
You said it was still overwhelming?
No, I was saying it felt overwhelming in the beginning because it's a lot of overthinking.
All right. So was it did today calm down?
Yes, it did.
Now you get when I say just hold on. Stay the course. I tell everybody that. Just stay the course. Hold on. There's a reason there's another class coming. All righty. Have a good night, ladies and gentlemen. Thank you for holding on.
Thank you.
Have a good night.
Have a good night.